everyone. Welcome to this morning's edition of MPC Markets Morning Call, 16th of July, 2025. We had bank earnings overnight, and they led the market lower as they beat analyst expectations, but disappointed investors overall. The only real bright spot was Nvidia, as trade of their H20 chips was allowed back into China overnight. The ASX was up yesterday. There was some pretty positive Chinese data. Industrial production was up 6.8%, expected at 5%, and GDP was 5.2%, expected at 5.1%. So that's some fairly positive news there for the Chinese economy overall, which was obviously pretty good for our materials sector and generally our economy overall in the long run. Despite that, the China A50 was down slightly yesterday. Dow was down about 1% overnight. The S&P down about 0.5%. The Nasdaq was, as I said, was saved by Nvidia being up quite considerably, as those chips were allowed to be sold into China again, which is very odd considering Trump's aversion and the national security issues that go with Nvidia selling those chips into China. I would have thought this would be one of Trump's largest bargaining chips, and he's effectively assured Jensen and Nvidia that he's going to give that away. So, I don't know how much art of the deal is going on there. The Russell was down about 2% as well, probably on the back of the CPI data. CPI was slightly hotter than expected, not by much, but it certainly didn't show further slowing. And there is concerns out there at the moment that with commodity prices heading higher and these tariffs coming in, inflation may have bottomed and maybe started to head a little bit higher, which puts rate cuts in doubt for sure. So the only real spots of green here overnight were Nvidia up 4%, Broadcom up 2%, Oracle was up 2.5%, Microsoft up around about 0.5% as well. But all the cyclical stocks just got hammered, I've got to say. Home Depot down 3%. All of the oil stocks, United Health woes continued. Uber was down a couple. Tesla down 2%. The healthcare stocks got hit again for some reason. There wasn't any specific news there. They were showing a little bit of resilience over the last week, but obviously last night they gave a little bit back. I haven't seen anything specific there in the news that should suggest those big drug companies should head lower, but that whole sector got really hit. Banks, BlackRock reported earnings, an extra 200 billion odd in FUM came in. So FUM, they're the world's biggest ETF provider, the world's biggest fund manager. They had inflows. They beat expectations on the top and bottom line. Despite that, they were off about 6%. And then we've obviously got Wells Fargo there as well, down 5.5%. That was probably priced as the most undervalued bank, and as these things tend to be, undervalued for a reason. So they again beat on top and bottom lines, but gave a disappointing outlook of income being lower in the forward year. Bank of America down; it doesn't report earnings until tomorrow. Down nearly 2%. JP Morgan down 1%. Trading volumes were up for them. But obviously it didn't tickle the fancy of investors. As the title suggested for today's podcast, we've got they beat earnings expectations by a small margin, but they have investors were just not happy with they weren't happy with the results overall. So maybe that might be a bit of a trend. It's very early to tell. But yeah, so semiconductors really did save this market overnight. If we didn't have that result in Nvidia, this thing could be quite a bit lower. Nearly all the commodities down overnight. Gold, silver, copper, platinum down less than 1%. Coal got hit a couple of percent, as did lithium. Bitcoin got hit as well. Uranium slightly higher. I dare say that's on the back of Trump's deal. Trump's policy announcement that they're going to push 80 or 70 billion towards powering AI and AI infrastructure. So that would have been positive. I would have thought, I suppose, copper and uranium probably the least worst commodities overnight, I suppose, with copper being flat and uranium being up slightly. So US dollar, I mean, I dare say a lot of this is to do with the US dollar being up about 0.5%, as those rate cut expectations were pared from probably about a 60% chance of a September cut down to about a 50% chance. So be interesting to see if we get a higher number in the PPI tonight. I dare say we could be in for some weakness overall, because I don't know how the market thought that tariff inflation, increased commodity prices, consumer spending being relatively solid but drifting, and there wasn't going to be inflation here. I mean, some of the figures for inflation over the last 5 years are quite extraordinary. All the major things that you need are up 50 to 60% in just 5 years. Cost of living is absolutely through the roof in every country just about in the world. And I really fail to see how the market could get their head around, those numbers being, anything but a negative, really. I mean, even oil prices have been up over the last month as well, and just didn't seem to reflect in the CPI numbers. So obviously that scaling back of the Bureau of Labour and Statistics and the sample data, etc. It seems to me that a lot of these numbers are coming out a little bit too rosy against the reality on Main Street. So we've got Johnson & Johnson, Goldman Sachs, Morgan Stanley, Bank of America tonight. We'll have Netflix on Thursday, which will be closely watched. Wells Fargo obviously reported overnight, so we just have to shift that one back a day. And then you got GE Aerospace towards the end of the week as well. That should be interesting. The defence contractors are getting loads and loads of contracts. We saw Drone Shield go to $3 billion market cap in Australia yesterday to be honest, like 60 odd million in new revenue. So those defence stocks are a little bit out of control at the moment, particularly in Australia because you've got so few choices. And this money just funnels into these few stocks. Like Austal's up a ridiculous amount. I mean, they're a shipbuilder and they really haven't got any major contracts, but the thematic is just so super hot at the moment. So where they stop, no one knows. In those sorts of cases, you want to be using a trailing stop generally, because valuation is just not part of the equation when people are buying. They're just purely following momentum. We gave away a tip, a stock tip yesterday, or a recommendation yesterday for Austin Engineering. You can grab that on any of our socials. We think that's a good buy. It's a turnaround story, and it'll play into the Chinese economic recovery, which we saw green shoots of yesterday. Good yielder, actually, 5% yield. Forward PE is 6. They've got they're multinational in terms of locations, which means they'll probably get to avoid most of the tariff pressures. And as commodity prices start to head higher, the big miners are they need to buy. They basically make mining equipment, buckets for loaders and excavators, etc. And they do it very well. But if given that they're in many locations all around, many mining locations all around the world, the big miners are going to want to buy locally to avoid those tariffs. So I dare say that turnaround story, they made a bit of a mistake, I think around about 18 months ago with some mispricing on some Caterpillar buckets too. And they've seemed to have gotten through that now, but it's been a very consistent company over the course of time. And other companies like Develop Global, I expect to do extraordinarily well in their quarterly updates coming up. So those mining services companies, those picks and shovels, are looking pretty good in the Aussie market. Don't expect much from the Aussie market today. We've got no data here. We've got employment tomorrow. I think the fact that the banking sector and the materials sector are both our biggest sectors. We don't have any semiconductors, which was the only thing that was up in the US. I think we're probably in for a pretty ordinary day, if truth be told. And I dare say those growth names, those hyper growth names like Life 360, etc., would probably get really smacked up today. those companies that are built on a promise rather than actual money coming in the doors. So enjoy your day today, and we'll speak again tomorrow.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.